Hello and welcome to our free setup market. Today is Monday, April 18th. I'm Robert Charles, and in this video, you'll discover all you need to know to trade and forecast Caterpillar. Now, if we take a look at Caterpillar, we have on top, as usual, our long-term weekly, medium-term daily in the center, and at the bottom, our short-term 60-minute chart. The context is fairly straightforward. Remember, we like to find markets that are range bound. So Caterpillar had a nice vertical move up. It's now gone horizontal on this weekly chart. It's starting to pop up. Now, if you've been following along with us, you could possibly be already long Caterpillar. We did have a buy setup back on the week of March 14th, which is starting to now work its way upwards. However, that really hasn't fully started its move yet. So that's what we're looking at on the weekly chart, and on that weekly context, look where that profit target is. The black line, our sweet spot, is right at the beginning of the resistance zone, which means more than likely that's the target that's going to hit the beginning of the zone. If, in fact, we do pop the top of the one wave on this weekly chart, which we're positioned for right now as we speak. Now, take a look at the daily chart where the new signal is. The new setup on this daily chart comes from today's trading. This is a upward move. This is the vertical move. We've gone for a relatively short period of time horizontal. It was a pretty typical textbook retracement. What's happened over the last day or so is it's popped up to the old swing high back here. You can see the buyers tried to take out that pivot and failed today. So right now we have a failed breakout in play. If this market rebounds, turns back around again, and takes out this old high, use the triggers you like to use for a trade. That trigger needs to be above today's high. That would give us a setup. What would negate this buy setup? If instead the market comes down and hits either the blue or the red line, most likely would be the blue line first, because the blue line's above the red. That's the faster moving average line. If price comes back and hits that moving average line before it triggers, that would negate the trade. You would take your trade off. But at the moment, it's looking more likely that we're going to head up. We'll take a look at the short-term set chart in a minute to see when that would likely happen. Here are the targets. Remember, we like to use 3 profitable closes. If you get into this trade and you have 3 profitable closes, we like to take some off at that point. If that happens before we hit targets, that means the market is moving a little slower than we'd like, so we like to play it safe. Notice that our black line is not inside the resistance zone. That does happen with regularity, but it's a minority setup. What that means is that the retracement was very, very shallow. That's what pulled this down outside of the zone. So you have a couple of targets to play with. You have the black line itself and the beginning of the zone at the top of the zone. Those are our targets. Typically what we like to do is take some off at each, trail stops as we go, and then hold one, see how far it will go. If this market does take off, it could conceivably hit the extended target as well, but the more likely targets are the black line and the beginning of the zone. That is assuming that we are able to take out the high, which will mean we have broken above this on a daily chart longer term high in Caterpillar, get a clean break instead of this fail that we had today, and we're more likely going to hit those targets. Nice profit potential with a relatively small risk in the daily chart. Now, if you take a look at the 60-minute chart, we see that what happened in Caterpillar is it broke down, and they tried to take out this pivot low, and they did for a while, and then this market went range bound, and in this area, the smart money was buying it on the short-term chart, and look at what happened. It really smoked its way up. This was a really good runaway market on a 60-minute basis. It hit the 4th target. This was the initial target here. Because of how wound up it was a short target. Hit the second extended, and all the way to the 3rd extended with the 4th target. This market on the 60-minute chart is way overbought. We can see from the cloud that it's going to start catching up to price somewhere late 21st, early 22nd, April 21st, 22nd. It may not go that long. I suspect it won't. But what you can expect over the next 2 to 4 days most likely would be sideways to downward action. The question is, if it goes down, does it go down too much so that the trade is negated? Why would that negate the trade? That means the retracement was stronger than we would have liked to have seen, and what it's doing as that happens is it's lessening our odds of a strong up move. So we don't want to see this retrace too deep. That's why we have the get out or scratch the trade, meaning you'd remove any entry you had above this high. If that happens, if this retraces down too far, it hits the blue line, you're going to take that off without getting in. So we'll see if what happens with this trade. More than likely, though, it's going to go flat to down for the next 2 to 4 days. Let that cloud catch up because it's way overbought in the 60-minute chart, and that's part of the reason why it failed to take out the this old pivot back here. This is the controlling pivot at the moment. It just had too much work to do, and by the time it got there, it had expended all its energy. So I still think there's a high probability it is going to take that high out, head up to the targets. But if it doesn't, then we'll just scratch and not get in at all. So that's why I like to look at this trade. So that's our look at Caterpillar. You got a sense on how we look at all these markets, etc. So thanks so much for watching. Have a great rest of your day. We'll see you tomorrow.